Are you already in the process of buying a house or dreaming of buying one? This video is for you.
We finally did it! Our new home!
In this video, I'm going to explain the whole process, step by step, in a simple language using my point-based strategy. Number 1, credit score. Unless you're buying with cash 100%, you are going to need a mortgage. That's the formal word for a housing loan. For that, you need to approach a lender. Lender is a bank or a building society. And then, once you apply, they will look at your whole profile. They will look at your income, expenditures, debts, and more importantly, credit score. Credit score is a number which reflects your credit worthiness. In simple words, how likely a lender is happy to lend you money. There are certain ways you can boost your credit score. However, having a decent one is very important for you to get access to number of mortgage products. Number 2, deposit. When you approach a lender, they will ask how much is the property price or the asking price. And then they will not give you 100% unless it's very special case. For that, you need to put a deposit. One simple way is by using savings. You could save for a deposit. However, it might take long. The deposit can be as little as 3% if you are a first-time buyer. There are certain government schemes that you can research and approach appropriate bodies to find out if you are eligible. If yes, that can be really big boost because you don't have to put a big deposit for that. But if it's for investment purpose, unfortunately you are going to need a bigger deposit. It can be as big as 25% or even 30%. If you are lucky enough to have generous friends and family, you could get your deposit as a gift from them or part of it. Gift can't be a loan, so you don't have to pay it back. You need proof from them saying that they are giving you a gift but not expecting you to pay back. And then lenders will consider that. Another good strategy is remortgage. Remortgaging is if you already have a property and the value of the property has gone up, you could approach a lender saying, hey, I got a property and the value has gone up now. Can you consider the new property value and lend me more money? In that case, you could use the remortgage money towards your deposit. Number 3, mortgage agreement in principle. You cannot apply for a mortgage without having an offer accepted on a property. The alternative is you go and get a mortgage agreement in principle from a lender. For that, you can approach lender directly or you could get the help of mortgage advisor. Having an agreement in principle will boost your confidence. That shows that you are serious and organized. You could share that with your estate agent to show that you got all the homework done, and they will use it to back your offer if you are to make an offer. Number 4, budget and requirements. Based on the mortgage in principle amount, you could work out the maximum budget you can go for. So that should include the factors like additional cost, like solicitor fees, stamp duty, which is a big factor these days. And then list down and finalize your requirements. Where do you want to live? The location matters most. And then what type of property you want to buy. Is it a flat or a house? If it's a house, is it a bungalow, semi-detached house or country house? And then how many bedrooms and bathrooms you're going to need. Do you need a garden and a driveway to park your car? So these requirements will help you to shortlist and list down the properties. Number 5, hunting for your dream house. Now that you've done all the hard work, you are ready to hunt your dream house. Now go and check various property listing websites and portals to come up with the list of properties you are interested, and then approach the estate agents to make viewing appointments. Once you got the list of appointments, you visit the property and look firstly whether it's for you or not. If it's not for you, don't spend too much time on it, just move on. If it's for you, and then look if it meets your requirements. Is it really good state so that you or your potential tenants can move in, or does it require some repair work? And then come up with a budget where how much of money you will need for those repairs. And then assess other requirements like the location. Is it close to schools? And how is the neighborhood? Is it safe? Local parks and transport, especially for commuting. And if it's for buy-to-let property investment, check whether there are big employers where your potential tenants will find it easy to find jobs. This is a big factor. And then various other things like any problems or why the seller is selling. You can ask the intention, the purpose for selling the house. That will also help you to understand the requirements and whether this property is for you. And then come up with a list of properties you are interested to make an offer. Number 6, making an offer. Okay, well done. You shortlisted your property and you are happy to make an offer. Now, look at the asking price and see whether it's worth. You can do various research, like you could analyze the local sold prices of other properties. And then, if you think it's worthwhile offering the asking price, go for it. However, if you think the property requires some repair works, and factor the numbers and come up with how much you will need for those repairs. And then you could go for less than asking price, but always make sure that you back up with facts and data. You could say, because of this repair work it requires, I am offering 10,000 or 20,000 less than the asking price. But still you want to look very serious. Rather than offering random numbers, go for the numbers you are comfortable with. The other scenario is going over the asking price. See if it has lots of interest and you know that there are more other people are interested to make an offer. In that case, you may want to go above the asking price. However, be careful. Estate agents are professional negotiators. They are very good at pushing you higher and higher. Don't get trapped on that, because when you approach a lender for mortgage, they will get someone to assess the real value of the property. And if that's less than what you have offered, you will find it difficult to get the mortgage. So, factor your numbers, come up with a number which is you are comfortable and confident, and then offer. Hopefully, your seller will like it. Number 7, mortgage. Congratulations, your offer has been accepted. Now you want to reach out to your mortgage lender or mortgage advisor to sort out the mortgage. They will ask various questions and ask for paperwork to prove your income and various other things. You might want to produce your payslips, bank statements. The lender will analyze them and then come up with a decision. Once you got a decision, you will get to choose what type of products you are interested in. Mainly there are 2 types of products. 1, interest only. 2, interest and capital payment. So, interest and capital payment are mostly associated with residential properties where you are either first-time buyer or you are buying a property for you to live. Interest-only products are mostly available for buy-to-let investment properties, whereas you only pay interest. In that case, your mortgage payment is lower. However, keep in mind that end of the term of the mortgage, you are still left with the full capital where you have to clear. You need to have a strategy to clear that. You could either sell the property, or there are various other ways you can source funding to clear the capital. However, that's not going to be a big problem. Once you sorted out, you could consider the interest rates and the fees associated with the products. Lower the fee is better always. However, bear in mind that some products with higher fees will come with a lower interest rates. So do your maths and work out how much are you going to pay over the period of the mortgage term, and usually go for the cheaper one which may have higher fees, however lower interest rates. Take your time, do plenty of research, and then come up with perfect product for you. Your mortgage lender and the advisor should also be able to help you to make the right decision in this case. Number 8, survey. Your mortgage lender will get someone to go and check the property anyway, and they will do a basic survey. However, the good practice is to appoint someone else to go and do a proper professional survey. The surveyor will go there and analyze and inspect property using different aspects. They will check the roof, walls, windows, floor, and the structural work as well. And if they find any defects, they will include them. Eventually, they will produce a detailed report for you to look and analyze. Once you receive the report, go through it, and if there are any defects or maintenance work or repair works, they found it, consider approaching your seller, probably through the estate agent, and say, look, my surveyor has found these defects and I have worked out this, they will include this much of money. And then try and negotiate down the asking price, saying, okay, it's going to cost 10,000 more for me to do those repairs. Are you happy to go down on the asking price? If you back your argument with facts and numbers, most of the time sellers will consider and appreciate that and happy to go down. So that's a big factor as a result of the survey. Number 9, appoint a solicitor. You are going to need a solicitor or a lawyer to handle your transaction. In that case, you get the choice to choose one. Unless your lender has special requirement where they will appoint one. If you got the choice to choose one, do plenty of research. These days you can go online and view the reviews and then decide, which one is good. Don't go for the cheapest one. Go for a reliable one. You can ask your friends and family or use online reviews to find a good, reputable, reliable solicitor. They will need to analyze your requirements and also the documents. They will ask to send you various type of documents. One important thing they need to carry out is money laundering checks, whereas they will need to find out where your deposit is coming from. Is it legitimate or not? They will ask you to provide proof of funds, whether it's coming from your savings, in that case, bank statements. Whatever the reason, they will need to assess this. Your solicitor will communicate to the other party, which is a seller's solicitor, and raising queries. These inquiries will involve like the title, the contract paperwork, and once they receive the responses back, they will review them. Until they are satisfied, they will keep doing it. Once they are satisfied, they will let you know that, okay, everything is in good place. Now you need to agree on completion date. So completion date is a mutual agreement between you and your sellers. Once everyone is happy and agree on a date, the property transaction will go ahead. It will have multiple steps like exchanging the contracts, which is a legally binding document. In that case, you cannot pull out. Once that's done, the last part of the completion, which is paying the seller asking price using your deposit and mortgage money, will conclude the completion. Number 10, and the final step, completion. Well done and congratulations. You got the keys to your dream house now. You are the new owner. Make it a home if you are to live it, or let your tenants to make it a home. This is overwhelming process and well done, going through whole process step by step. If you like this video, comment and share with your friends, and also subscribe to this channel and hit the bell icon so that you will get the notification every time when I upload a video. Disclaimer: these are not financial advices. Always do your own research and seek professional advices before making financial decisions. Until we meet in another video, bye bye for now. Have a good day.